We got off to a fairly heady start on the benchmark indices, and as we looked as though we were close to approaching 5450 on the index towards the last half hour of trade or so, is when we tempered down marginally to end very quiet. For the small and the mid-cap index as well, it seemed to be good going, and then we ended very flat, just about in the red. Let's pull up some of the sectoral movers, and it was the entire IT pack that saw intense buying pressure throughout the session, as did the technology sector. But it was oil and gas and the auto basket which was a bit weak throughout. So let's pull up some of the big index gainers. Ken India topped that list. You also had Ranbaxy that hit a new 52-week high today, and over the past 2 days has gone on to notch up by close to 7%. It was the entire IT index that gave a lot of support to the benchmark indices, so TCS and Wipro featuring on the list. To some results which were declared today, Shree Cements came out with a great set of numbers, the street also taking very kindly to it. As you can see on your screen, a good bout of buying activity. The profits came in at 352 crore rupees. This is vis-a-vis a figure of 55 crores on a year-on-year basis. The top line also grew by 43% at 1,460 crore rupees. But all in all, it was a fairly steady day of trade. Let's find out how the F&O activity panned out. We've got Darshan Mehta standing by from our research desk with the latest. Darshan.
Well, Avan, it was pretty much a flat day of trade in the F&O space. We ended at 54.32 below we managed to go above the 54.50 mark, but then cooled off the day at 54.32. Clearly, if you're seeing that almost 7 lakh shares, 7.8 lakh shares were added in open interest, and the Nifty PCR moved from 1.30 to 1.31. Where were individual calls and put being written in terms of call? 5,500 was where call writing was seen. Almost 4.4 lakh shares were added in open interest, and at on the put side, there was shedding of open interest from 5,300 to 5,400 levels. Almost 2 to 4 lakh shares were shed in open interest. Stock specific counters like Kane and Ranbaxy saw fresh longs that came in. Along with it, the entire IT space looked good in trades. So fresh buying was seen in the top 3 IT space, in TCS and Wipro. Fresh shorts were seen in counters like an Eskumar and Opto Circuit and Eskumar, both of them down over 10%. Reliance as well as M&M, L&T, all these counters of fresh shorts that actually came in. Long unwinding was seen in Jet, and short covering fresh longs was seen in MTNL and Orchid Chemicals.
Thanks very much, Darshan, for breaking it down for us and giving us a perspective on the F&O activity. To some stocks in news then, in the metals pack, JSW Steel and Kalyani Steel tempered off by the end of the session as the Supreme Court adjourned the Karnataka mining case now to the 31st of August. Apart from that, you had a Jet Airways that counter declined by close to 4.5% after a ban on F&O trades. Kotak Securities also came out with a report rating the stock as a sell. Emami, on the other hand, from the defenses, got a good fillip in the session as Credit Suisse initiated a coverage with an outperform rating. The price target was set at 619 rupees. Opto Circuits, that counter has been bleeding for the past many days. Today was no exception. In fact, it's trading at its 3-year low, and that's the lowest level that the counter has touched since August 2009. Over the last 2 trading sessions, it's been down nearly 20%. And in fact, on a negative brokerage call coming in. Glenmark was in focus as the ICDR ruled in favor of the company in arbitration against NEPO. The ICDR, remember, is the International Center for Dispute Resolution, which found NEPO Pharma breached the collaboration pact, and it ruled Crofellmer rights, which include 140 countries for Glenmark. But let's find out how the market men are approaching the Indian markets and what they make of it at this juncture. Lalit Thakur of Angel Broking thinks that the auto stocks are in top gear, while Bharat Shah of Ask Investment Managers is of the view that pharma stocks will reap strong returns.
If you look at the Marutis, the margins are very low at 6.5%, 7%, probably because of currency depreciation or whatever. So I think that the prospects for auto industries are going to improve. And for Maruti also, I think that for next 1.5 years, the prospects are positive.
In pharmaceutical, we have discussed that there is a superb global opportunity, there is a local opportunity, and both opportunities are there to be kept for businesses with the right kind of a business models.
One should pair the exposure from Hindustan Lever and in favor of ITC within the large cap space. Nestle is clearly a favored stock in terms of valuation gap vis-a-vis Hindustan Lever. Another thing what we are seeing in this space is to pair exposure on Godrej Consumer and maybe shift in favor of Marico of the world. So this is how we have positioned ourselves within this particular sector.
Okay, those are some of the top stocks to keep on your radar. But meantime, what was down and out in today's session? It was the entire ADAG pocket led by Reliance Infra, which shut sharp at 501. You also had M&M, which has been seeing quite a bit of a losing streak of late. L&T was also on the index losers list, and Reliance Industries once again below 800 at 794.